Hi, my name's Scott. This is Dennis. We are looking to disrupt investment management. Why would we want to disrupt investment management, particularly hedge funds? Because performance has been poor, investment is low, and costs are high. There must be a better way to get money from investors like us to investment managers. So how are we going to do this? Let me tell you a quick story. If you were traveling 10 years ago, you would be staying in a costly hotel chain somewhere. Then 10 years ago, Airbnb appeared and said, actually, there's a better way to do accommodation, and they built a platform. The platform allows them to open up a whole new set of capacity, boutique accommodations, houses, to allow travellers to stay in interesting places. And Airbnb says, we'll solve the infrastructure, the search problems, to open up this new capacity. That is what we are doing for investment management. There are a whole lot of large investment managers out there who deliver substandard returns, but there's a whole lot of boutique and interesting investment managers, and the alpha and excess returns are there. They just are very difficult to access. So what we are building is a platform. These investment managers or hedge funds don't get capital from us. They send their trading strategies into us. So we become the platform, the fund. We are partnering with these managers. They send trading strategies. We share profits with them, so they're only paid on profit. And we can then dynamically allocate to construct custom portfolios for investors. So if we think about what's happening now, we've stripped out costs in terms of search for investors, operational costs for hedge fund managers, and we have this real-time information from strategies, which allows us to exert very tight risk control. We can close down stop-loss strategies if we need to within seconds. We can manage the risk completely tightly. Let me go to the demo. We've got sort of three parts to what we want to talk about. One is alpha strategies, where we select, because if you select the wrong strategies, there's nothing you can do, right? You either find alpha or don't find alpha. So here we have a series of our sort of first set of alpha partners, which are our hedge fund partners. They're based all over the world, trading equities, futures, FX. And the key here is you'll see that we've been able to help ourselves, but also our investors, distinguish alpha from factor risk from market risk, right? You don't want a whole lot of market risk pretending to be alpha. You need to find the strategies with alpha. If we then dynamically combine, because investing in individual alpha strategy is kind of risky. If the strategy does badly, that can be problematic. So you really want a dynamic allocation to these strategies. So our platform allows us to dynamically allocate. And that allows us to construct custom portfolios. So investors don't want, here's the product, buy it. They want something that's customized to their needs. Here we have, for example, our pure alpha product. This shows the returns from around about a dozen of our sort of alpha partners, low market risk, low drawdown, high Sharpe ratio, just an attractive product. And we can do it with a very low, essentially a zero management fee, because the costs have been stripped out of the whole production and everything's on performance and alignment. If an investor is interested to start to construct their own portfolios, they want to say, okay, which of the strategies are the strategies that I like? I like equity and FX, but I'm uncomfortable with commodities. We can start to build a portfolio. So here, and when you build a portfolio, you have to be, you don't actually just want an alpha portfolio. You want an alpha portfolio that best contributes to your existing portfolio. So first we load up an example existing portfolio, equity and bonds. And see, it's done well for a while and then sort of stressed out a little bit, and it's got a 15% drawdown. So that's probably unpleasant while you're in the middle of it. Now let's start to construct an alpha portfolio. What we'll do is we'll select, in this case, just the top 5 for simplicity's sake of our sort of alpha partner strategies. Yeah, one more. And here they are. Now let's move to then how do we put these strategies together? How do we construct a portfolio? So you have different ways to do that. Equally weighted is one way. You can do it risk parity, which allocates risk, the allocation is according to the risk of each of the strategies. or mean variance. We see here mean variance is a pretty noisy strategy. Let's have a look at the weights of mean variance. What we see is it is quite noisy and sometimes dominating, some single strategies are dominating this whole portfolio. So let's kind of regularize that. So let's say only 30% is allocated to each strategy. What does that look like? That gives us a better performance for this mean variance strategy. In other words, how we're combining these alpha partners. And the weights are a bit more sensible. Now we have our alpha partner portfolio. We have our existing portfolio. How do they combine? And what we see is they generate strong performance. So the blue line is what we're interested in. The black line is what our current portfolio is in. The Sharpe ratio moves from 0.8 to 1.25. The drawdown loses around about 4 or 5% less. Underwater, in other words, the drawdown is lower, so it's no longer almost 12%. It's sort of now around about 7 or 8%. And we go next. We can move to, if we want to allocate more, we can allocate to say 50%. So we really like these alpha partners. That makes it even better. If we move forward to the visualization, we see that we're moving the client portfolio from bottom right to sort of top left, higher returns, lower risk. And we can also look at the sort of factor exposures of each of the portfolios. So what we are doing is restructuring investment management to allow boutique fund managers from all around the world to send data to our strategy, to our platform, to construct custom portfolios for investors all around the world. Thank you very much. Come and talk to us.